Today we are talking about trendline mastery and how you are going to be an expert for trendline trading after this video. So hello, welcome back, and thank you for the overwhelming support on the last videos. It has been great to see all those comments, all those likes, those shares. Keep it coming. Leave a comment below this video. I've turned all the ads on the video, and let me know your feedback and let me know your thoughts. A thumbs up is always appreciated. And now let's get into trendline tips. So today I've prepared a very special video about how to become an expert about trendline trading, and I've broken it down into 5 different parts. In the beginning of the video, we are going to take a look at how to draw trend lines, what are the most important tips. Then we're going to look at how to use angles to understand momentum structure of trends. We're going to look at break and retest strategies, trendline bounce strategies, and flag pattern strategies. So you can see in the first part, we're going to cover the basics, and then we are going to take a look at a few specific strategies. So when it comes to drawing trend lines, it is usually very straightforward. The first very important point is that you need at least 3 touch points to confirm a trend line. You can always connect any 2 random points on a chart, so we need to have 3 touch points to confirm a trend line. It looks like this in practice. So when we have a chart, we have the origin where we have our first swing point. Then obviously on the next swing point, we can draw our connection. Again, you can connect any 2 random points, and only if you get a third bounce, then you have a pattern, and then you have a trend line actually that is validated in the markets. So after the second touch point, you can wait for the price to get here, and then there are a few strategies that we can apply and that we will learn later on how to capture those trades. Here again, a very nice trend line. We have our first origin, we connect it to the second point, and then here it is confirmed. You have another bounce, then you have a break and retest pattern, and another break and retest pattern. Those are patterns and strategies that we're going to learn about in the second part of this video. What really helps for new traders is to switch to the line graph every now and then, because on a line graph you reduce the price action to what it is really necessary. So you only get what is important for trend lines, which is the closing prices and the bounces of those swing points. So if you switch to a line graph, you can see them very nicely, and you can validate if you have an actual trend line. Because what you don't want to see is on a line graph that the line graph goes through the trend line, because this is our next very important point. Never cut through bodies. This is very important. So a good trend line will never cut through a body. So this is not what we want to see. We want to see, like if you remember in the first part, so the first example, we connect the lows here, and it is okay to cut through the candlestick-wicks, no problem, but you never want to cut through a body. If you have to cut through a body, this is not a trend line that you want to take on your charts. You cannot use it on your charts, because obviously the trend line is not respecting the price action. So never cut through the bodies, and 3 touch points at least to confirm a trend line. That is the very basics of how to draw trend lines. When I started out and when I didn't know how to use trend lines, and when your eye is not practiced and used to spotting trend lines, what I find really helpful is that you just pull up a blank price chart, then you sit back a little bit and you just try to eyeball with your eyes where could a trend line up, and then over time your eyes will get used to it. You just sit back, you look at it, okay, where could here be a trend line? Maybe if we draw something around here, this could line up. Maybe if we have a trend line down here, this could line up. Maybe even when we look a little bit into the price action down here, maybe we have a few touch points. But over time your eyes will get used to it. It's a very quick process. So play around with it, be patient with yourself, and then after a while you will be able to spot nice trend lines. And as we will see now in the second part, there are many different ways of how we can use trend lines. So another very important concept is that we look at the angle to understand momentum structure. We want to see, is the angle of a trend line rising or is it decelerating? And this will tell us a lot about what is going on in the markets. It is something that is really important when you want to understand price action and trends. So here, for example, on the left-hand side, the market had a very steep declining trend line. So the trend line that I draw here has an angle of of 49 degrees. And this is a very steep trend line. And then what happens in the later development of this trend? Obviously, the trend really slowed down. And when you draw the trend line now connecting the highs, it is only 7 degrees in steepness. So obviously a huge difference, whereas the price was able to push lower here very easily. Here, the market almost flattened completely out. Here in the later part, you have a double bottom. If you put an RSI or stochastic or a MACD on your charts, you will also see that there is going to be a divergence, and this is also visible and observable with the help of trend lines. So you can already see, okay, this tells you, what does it tell you? That the market is really slowing down. That whereas here there were a lot of sellers in the market, here the sellers withdrew and they were not as interested anymore, and they were not as able anymore to push the price lower. You can see here lower low, a lower low, and a lower low. At the same time, lower highs, whereas here the market was not able to push lower at all. Not a lot of sellers, the sellers did not have a lot of power, and probably the buyers stepped in earlier and earlier to drive and to push the price higher again, until here the trend line was broken, and then the market resumed and started a new uptrend, also a very steep uptrend. So angles and just looking at generally how strong is the market falling and is there a change in how strong the market falls is going to help you a lot. Here as well, when we connect the lows of this trending phase, you can see quite a steep trend. And then here in the later part of this trend, the market slowed down. When we look at this trending phase here, you can see the market pushed higher and higher very easily. Whereas when we look here at this second part, you can see here is a double top. So the market was not able to push higher at all. When you look at the lows, they're not able to rise as fast anymore. And then once the market really rolls over and breaks the trend line, then you're looking at a completely new trend. And you can see how fast does the trend change happen. Here, probably a lot of buyers were already withdrawing. The buyers were not interested in the market anymore. And the sellers were slowly building their positions until at one point the sellers had such a huge majority that there were not a lot of buyers anymore in the market, and so the market was able to just completely fall lower very quickly, because on the other side of the positions there were no buyers anymore. So the market just fell like a stone here. Here's another example of how to use trend lines and look at steepness. And the market can not only slow down, but there's another phenomena, and this is usually called bump and run pattern in general technical analysis. So when you have a trend line that is well confirmed, you can see here's the origin, you have your second point, here it gets validated, you have a fourth point, and then what happens here is very important. Suddenly, whereas previously the market was always able to stick to the trend line very closely, the market never really pulled away from the trend line, something happened here. The market suddenly shot up high very quickly, very far away from the trend line. This is one of those concepts of the bump and run pattern. Suddenly the market has a final push or even a second final push, and this shows an unsustainable market force. So very late in the trend, a lot of buyers stepped into the market, tried to accelerate it, and then the market saw a huge jump, but it failed. And then the market tried to make another jump, and at this time you can see the market barely pushed above the previous high points. So this is also a very important tell here. An unsustainable push very far away from the trend line, and then a failed breakout attempt beyond the previous highs. Both show signs, or both are caution signs that should really get your attention and should get you ready to look for bearish opportunities. And then here we have a pattern that we're going to look at in the second part. It's a break and a retest pattern of a trend line, and we will see later how to trade those. But it's very important that you start looking for changes in market structure. And when you can see that previously you were able to draw a modest trend line here, connecting the high, connecting the lows, resulting in a 34-degree trend, which is modest. It's not very steep, but it's a decent trend. And also the market and the price action was not really leaving the trend line. It was always sticking very close. And then suddenly you have a huge change in the market structure. This should really be a heads up and really get you interested in such a chart. So let's take a look at our first strategy, and One of the most common ones is the break and retest of trend lines. It can be high probability trading setups, so let's look at how to approach those. And I use those in my trading to some degree, but who's really a trendline master is Moritz, and he's teaching one of his trendline based day trading strategies in our masterclass. If you're interested, make sure to check the link in the description below. Moritz holds around 2 to 3 live webinars a week where he shares his complete approach and shows the trades that he's taking. So if you're interested in learning how to master trendline day trading, then really make sure to check the link in the description below. So here we have a modest trend line, a very, very slowly declining trend line. You can see the market was probably more or less in a range market. We have here a double or triple bottom, and then you can see the market kept pushing into the highs and pushing into the highs. Especially here we have a breakout buildup, which is something that we are going to take a look at later. But you have a breakout and then you have a pullback. And this is a very, very common phenomena. So I've been trading Forex now for 12 to 13 years. And in the early days of my trading, breakouts were very common. So once a trend line was broken, the market would just take off. But over the last few years, the break and retest pattern has become more and more observable. And this is something that will work across all the time frames, across all markets usually. So a very, very interesting pattern. Once you're able to draw a valid trend line, wait for the breakout and then wait for the retest. And this can be a very, very high probability trading scenario. You can see here the trend line can be also the foundation of channel patterns. So you can see we have 2 parallel trend lines. And again, what do we see? First, we see on the left hand side a very, very steep rising trend that then suddenly drops off, and the angle obviously changes significantly. Very steep, and here less steep. We have a nice, perfectly well-defined trend line with at least 1, 2, 3, 4 touch points, and some that come very close to it. And then here on the breakout, you have your retest within a few candles afterwards, and then the market completely drops like a stone. So really, really interesting pattern. And this is also something why for many traders break-even stops are not working anymore these days, because what happens is that they trade the breakout, then the market moves a little bit in their favor, they adjust their stop loss to the break-even level, and then the market does the pullback to the breakout area and then performs the retest where they catch all the break-even stops. So if you have issues with break-even stops and you think that they are not working for you, then look into a pullback and retest patterns. I've made another video about this as well. You can just go to my channel and search for pullback or retest trading strategies, and you will find more strategies around this as well. Here, another classic example. This is something that you will see time and time again. The market was in a very weak downtrend. We have a nicely defined trend line, 1, 2, 3, 4 touch points. And then here we have the very nice breakout. Obviously, after the breakout, there's a lot of volatility happening in the markets. So breakouts are becoming increasingly harder to trade, I found, over the last few years. You can still make them profitable, but it's just become a very different approach. And then the market drops into the trend line again and then accelerates away from the trend line. So many breakout traders will be probably driven out of their trades here because it's just very hard to hold through such a volatile market. But you can see the pullback traders, they wait until they see the market has really consolidated at the trend line, and then you see a strong push and a huge start to this new uptrend. And again, at the top, you can see we have here roughly a triple top, and the market just died down. And once you can see that, again, maybe you got in here on the pullback or on the breakout, on the retest, and then here, once you see that the market is going sideways, when you can connect the lows, then it is time to exit your trade. The second strategy is the Trendline Bounce, which is usually how trend continuation traders trade and trend following traders. So the idea is that you have a nicely well-defined trend line, and then you wait for the price to consolidate around a trend line. So you need to have a consolidation around a trend line. So we have 1, very close, 2, 3 touch points. And at the third touch point, you also have something that you could call maybe a triangle pattern. You can connect the highs with the horizontal area. So you can see we have 1, 2, 3, 4 touches as a resistance level. And then the breakout happens here, and then the trend continues into the direction of the previous trend. Here, another example, we have a nicely defined trend line. Here's the origin. You have the second, the third, and the fourth touch point. And then here you can draw a horizontal level around the fourth touch point, and you can define the consolidation here. And once you can identify such a sideways consolidation, then you wait for the breakout, and you could either trade those with a break and retest as well, maybe on the lower time frames, or you can trade them as a real breakout on the initial breakout, because usually there has been already a lot of consolidation and a lot of build-up here happening in the pattern. And also remember that here you are already in a trend, whereas previously when you trade the break and retest pattern, that usually happens when a new trend is created. So the dynamics are a little bit differently. So here is a higher time frame. This is a daily chart, and I have drawn this nice trend line here with 1, 2. Here we have the third touch point and the fourth. First of all, is this a violation or not? This is somehow cutting through the bodies, but if you look at it, this is a weekend closing candle or a weekend opening candle. So the market, they opened on the previous day here, it jumped up on Monday morning, and then it closed much lower. So actually there was never a close outside of this trend line. And just because it was a weekend open, it means that the market opened here and then dropped like a stone when the market resumed trading. So this is not really a violation of the trend line. And we can go to a lower time frame and see how both scenarios look like. So here's the first scenario where you have the violation on the higher time frames. And you can see we can draw something, you might say this looks like an ugly or very dirty head and shoulders. You have your left shoulder, the head is then the weekend open, and here's your right shoulder. Obviously there are lots of violations, and this is just an example. Sometimes you will get picture perfect, nicely tradable scenarios at those trendline bounce scenarios. Like here, for example, this is the second scenario further down the line. So here, the third touch or the fourth, the second error is here the scenario on the right hand side. And here you can see you have more or less a nicely head and shoulder, you have a triple top even here, you have a breakout buildup, which we're going to take a look at shortly. And this is a nicely tradable pattern here. The breakout after this trend line then continues the trend. And also, this is a trend following approach, whereas you are overall in a downtrend, the trend line helps you define trend following entries after a significant pullback. So the market comes back to the trend line, the uptrend here is exhausting, and then it falls lower. It comes back into the trend line, the uptrend or the attempt of the uptrend here is over. You can clearly see that the candles are getting smaller and smaller as the market moves into the trend line, and then you can capture on a trend following move. So really interesting how you can use this also with a top-down approach. The third pattern is the flag pattern, which is probably one of the most commonly used ones. It's a very high probability trading setup that works really well. It's also a trend continuation and trend following approach. And in this case, I have applied a longer term moving average to help us understand where is the general market direction. And you can see the market or the moving average is moving lower here. Here it somehow topped out, then the market broke below the moving average, and then it started its downtrend. And during downtrending phases, you will sometimes see those consolidations. And very often you will be able to define those consolidations with a trend line. You can see we have 1, 2, 3 touch points, then the break and the retest of this flag pattern. So you could either trade the initial breakout, or you can wait until the market has successfully retested this trend line. Another very important thing is to note here is that looking at trend structure will help you as well. This initial downtrending phase here was very steep. So you can see the downtrend started with a very strong move. Then at one point, any price wave will come to an end and the correction wave will start. It's just how markets move. You usually have a strong push into one direction and then a consolidation. But you can compare the two trend waves. Very steep decline shows a lot of selling pressure, and then here the consolidation is not really showing a lot of bullish pressure. And if we put this into the context of the downtrend, we will understand, okay, here a lot of sellers were in the market, here not a lot of buyers were in the market. So it seems like that this may be just a temporary consolidation in an overall downtrend. So it helps you understand and helps you place those flag patterns within trending concepts. It's very, very, very helpful and really a powerful concept to understand, okay, strong downtrend, very weak consolidation. And a weak consolidation has then a higher likelihood of actually being over, and then the continuation of the previous strong trend can go on. Here as well, we have a long-term moving average here, and more or less the market trades below it. Sometimes, obviously, there are breakout attempts, but if the breakout attempts are faded off and the sellers resume, then you can use flag patterns within those consolidations. You can connect the lows, 1, 2, 3, 4 touch points. And again, strong downtrend, weak uptrend. The weak uptrend is a consolidation then. And once the trend line is broken, the strong downtrend can resume. And then here, a weak bullish phase, very weak. Compare this strong downtrend to this weak bullish phase. And then here, the breakout eventually of the flag pattern happens and a strong downtrend can resume. So it's really, really important to understand that you can or need to distinguish between strong trending moves and weak corrective waves and corrective phases. This is a general market concept that is helping you understand the dynamics between the buyers and the sellers. Really, really important key factor. All right, last example, and here it becomes really obvious. We have a strong downtrend, a weak bullish phase where we can draw a trend line to define our flag pattern. You can even see here in the last part, the market shows a little bit of a bump and run pattern, right? Whereas previously the market stick to the level, here it tried to accelerate away from the level. Immediately the sellers stepped in with huge bearish candles, drove the price below the trend line, and then the downtrend continued. So you can really put this into nice context. Strong downtrend, a lot of sellers in the market, weak uptrend, not a lot of buyers. So this has a very low likelihood of actually resuming and continuing a strong uptrend. So you better get ready to find bearish continuation trades. And this is how you can use trend lines together with trend structure and momentum analysis to find much, much better trades. So I really rely on your feedback. Make sure to leave a comment, leave a thumbs up, share this video with your friends. I will keep this channel ad-free as long as you help me with leaving comments and sharing the video. And I will be back in a few days with a new special video. You can also let me know what you would like to know about and what you want me to make a video in the future. So leave a comment below with whatever feedback you have. I look forward to reading it. I'm replying and responding to as many comments as I can. And thank you again for the overwhelming support. Happy trading and see you soon.